On the morning of November 6, 1956, a pivotal moment in geopolitical history unfolded. Harold Macmillan, serving as the British Chancellor of the Exchequer, reached for the telephone in London. On the other end of the line was the administration in Washington, D.C. The communication he received was blunt and devoid of diplomatic pleasantries. The message was clear. Great Britain must withdraw its forces from Egypt immediately. If they refused, the United States was prepared to liquidate its massive holdings of British sterling on the open market, effectively obliterating the value of the currency in a single afternoon. Macmillan found himself in no position to argue. He simply could not. At that very moment, the Bank of England was hemorrhaging its foreign exchange reserves at an unsustainable rate. The British pound, which had reigned as the world's dominant reserve currency for more than a century, was a mere 8 days away from a total collapse. It is a staggering realization that it took only 8 days to dismantle the British Empire, not decades or years of gradual decline, but 8 days from the initial invasion to a humiliating surrender. The weapon utilized to achieve this was not a nuclear bomb or a conventional military strike. It was a calculated currency attack. Before we explore the depths of this narrative, it is important to note that this is a historical analysis and does not constitute financial advice. You should always conduct your own independent research. This is a chronicle of what occurs when the world's primary reserve currency loses its fundamental backing. This sequence of events happened to Great Britain, and the pressing question today is whether a similar trajectory is currently unfolding for the United States. To fully grasp the magnitude of what the British lost, one must first understand the sheer scale of what they once possessed. In the year 1900, the pound sterling accounted for over 60% of all global currency reserves, while the US dollar held zero. More than 60% of all international trade was settled in pounds. The sterling zone, a vast network of nations that either used the pound or pegged their own currencies to it, extended across the globe, from Australia and India to Hong Kong and the Caribbean. The strength of the pound was not merely derived from gold, it was backed by the immense reach of the British military. British garrisons were stationed strategically from Egypt to Bahrain and Singapore. The Suez Canal was frequently referred to as the jugular vein of the British Empire. These military installations served as a guarantee for global trade routes, and those trade routes, in turn, generated the massive commerce that established sterling as the world's money. However, beneath this facade of strength lay a fatal structural weakness. The foreign holdings of liquid sterling were 3 to 4 times larger than the actual gold reserves held by the British. As long as international holders did not demand their money back simultaneously, the system remained functional. However, the moment that global confidence cracked, the underlying mathematics would become lethal. The crisis finally ignited on July 26, 1956, when Egyptian President Gamal Abdel Nasser moved to nationalize the Suez Canal. He used the name Ferdinand de Lesseps, the original builder of the canal, as a secret code word for Egyptian forces to seize control of the waterway. In response, Britain, France, and Israel launched a coordinated military invasion. From a purely tactical standpoint, the operation was a success. The canal was successfully taken. However, the United States had entirely different strategic objectives. President Dwight D. Eisenhower directed Treasury Secretary George Humphrey to prepare for a massive sell-off of America's holdings in British sterling bonds. This action alone was sufficient to crash the pound. Simultaneously, Eisenhower moved to block Britain from accessing its drawing rights at the International Monetary Fund, IMF. Without access to these funds, Britain lacked the capital to finance the essential imports of oil and food required for its survival. The Bank of England continued to bleed. Academic research from Queen's University estimates that losses in the first week alone reach $116 million. By mid-November, total reserve losses had escalated to $400 million. Britain's reserves were effectively falling through the floor. Macmillan was forced to fold. A ceasefire was declared on November 6th, exactly 8 days after the invasion had commenced. The price for a financial rescue was nothing short of total national humiliation. The IMF eventually provided a $1.3 billion loan, but it came with a non-negotiable condition: the full and immediate withdrawal of all forces from Egypt. This meant every soldier, every tank, and every ship had to leave. Prime Minister Anthony Eden, broken by the crisis, resigned in January. While the pound managed to survive at its previous exchange rate, it was essentially on life support, a state that would not last indefinitely. This is where the historical narrative becomes critically relevant for Americans today. What followed was not a sudden, explosive collapse, but rather a slow bleed that persisted for an entire generation. This process trapped ordinary British citizens and savers inside a depreciating currency with no viable means of escape. A critical, often overlooked detail is that Britain maintained strict exchange controls from 1939 all the way until 1979, a period of 40 years. During this time, ordinary citizens were legally prohibited from moving their wealth out of sterling. They could not legally purchase Swiss francs, they could not open foreign bank accounts, and they were forbidden from buying gold abroad. They were effectively locked inside a dying currency. On November 18, 1967, the government under Harold Wilson devalued the pound overnight. Wilson famously appeared on television to assure the public that the pound in your pocket had not been devalued. It was a blatant falsehood, and the public knew it. 2 months later, Wilson announced a total military withdrawal from all bases east of Suez, including Malaysia, Singapore, and the Persian Gulf. By 1971, the withdrawal was complete, and Britain's status as a global power had effectively ended. For British savers, the consequences were dire. Inflation began as a slow creep before accelerating rapidly. By 1974, inflation hit 16%, and by 1975, it reached a staggering 24%. In a single year, a quarter of a citizen's purchasing power simply vanished. Between 1956 and 1975, the British pound lost approximately 60% of its total value. The 1973 oil shock exacerbated the situation significantly. Having recently abandoned its military presence in the Gulf, Britain possessed no leverage and no basis to influence the situation. Oil prices quadrupled. Domestic coal miners went on strike, leading Prime Minister Edward Heath to implement a mandatory 3-day workweek. Factories operated for 3 days and remained dark for 4. As the lights went out across Britain, the value of the pound continued to extinguish. Gold could have served as a sanctuary for these savers. The price of gold in sterling rose from roughly $12.50 per ounce to over $360 by 1980. However, because of the strict exchange controls, most citizens were legally barred from buying gold internationally. They were forced to watch their life savings wither away. That was their only reality. While the wealthy found loopholes, utilizing pre-existing overseas assets, offshore trusts in the Channel Islands, or Swiss bank connections, the average saver, the pensioner, the teacher, and the factory worker had no such options. They remained locked inside a depreciating currency for the duration of their adult lives. Now we must examine how the US dollar rose to replace the pound sterling. On February 14, 1945, President Franklin D. Roosevelt, while returning from the Yalta Conference and only weeks away from his death, met with King Ibn Saud aboard the USS Quincy. The king had never previously left the Arabian Peninsula. The arrangement they struck was straightforward: American military protection in exchange for guaranteed access to oil. For 3 decades, gold served as the anchor for the dollar at a rate of $35 per ounce. However, in 1971, President Richard Nixon broke that anchor, and the dollar required a new foundation. In 1974, Henry Kissinger negotiated the petrodollar arrangement with Saudi Arabia. The deal stipulated that oil would be priced exclusively in dollars, and the surplus revenue would be invested back into American Treasury bonds. In return, America provided weapons and regional security. By 1975, every OPEC nation had agreed to price their oil in dollars. The US dollar was no longer backed by gold. It was now backed by oil and the military might that protected that oil. This is the very system that is currently facing an existential threat. This month, the American national debt surpassed $39 trillion. For the first time in the history of the United States, interest payments on that debt now exceed total defense spending. The dollar's share of global reserves has been in a steady decline for 2 decades. Central banks around the world are currently purchasing gold at a pace not seen in generations, and Saudi Arabia has recently joined the BRICS bloc. There is a specific detail that connects this history to our present moment. In the current geopolitical climate, Iran is permitting Chinese and Indian tankers to pass through the Strait of Hormuz while simultaneously blocking Western vessels. This is not a traditional blockade. It is a filter. It is creating a two-tier energy system in real time, one that completely bypasses the American security guarantee. The Gulf states are observing this shift and are beginning to ask the question that changes everything. If the United States can no longer protect the flow of oil, why should that oil continue to be priced in dollars? History provides a clear template for how reserve currencies decline, and the process is rarely what people expect. The Spanish silver dollar took over 150 years to decline. The Dutch guilder was dominant for 2 centuries before the Bank of Amsterdam collapsed following a bank run after the Fourth Anglo-Dutch War. The decline of the British sterling took roughly 70 years, from the time the U.S. overtook Britain economically in the 1870s to the clear dominance of the dollar by the 1950s. The pattern is consistent. Reserve currency transitions span decades, and multiple currencies often coexist at the top for long periods. Furthermore, the people living through these transitions are almost always told that the shift is not actually happening. Just as Harold Wilson told the British public that the pound in their pocket was fine when it clearly was not, modern leaders offer similar assurances. Currently, there is no single currency positioned to immediately replace the dollar. The Chinese yuan is hampered by capital controls, the euro faces deep structural issues, and a unified BRICS currency does not yet exist. The dollar is not going to disappear tomorrow. However, the pound did not disappear overnight either. It died a slow death over 30 years. During those 3 decades, every British saver who placed their trust in the system lost the vast majority of their purchasing power. Those who recognized the shift early and moved their wealth into gold, property, or foreign assets were the ones who preserved what they had. The underlying mechanism of currency devaluation remains the same. Only the currency itself has changed. The fundamental question remains identical. Consider the millions of people like Margaret who kept her savings in sterling because she trusted her government. Exchange controls trapped her inside a depreciating currency for 23 years. By the time Margaret Thatcher finally removed those controls, 60% of Margaret's purchasing power had been erased. No one technically stole it. Inflation simply consumed it, while the government maintained the facade that everything was fine. Governments do not provide a warning before they devalue your life savings. They simply execute the devaluation and then insist to the public that it never happened. If this historical perspective has changed the way you view the stability of modern finance and the hidden risks within your own portfolio, then you need to stay informed. We are dedicated to uncovering the history that the powers that be have attempted to bury. Subscribe to our channel and like this video to join us as we unearth the truth and prepare for the future. The next chapter of this global treasury will be revealed soon. Don't miss it.